the hell? Good morning, everybody. Let's see what is happening. Okay. All right, so well, I hope everything is working okay. Yeah, 1 second. Sorry guys, be patient real quick. Alright, well, hope everybody's doing well today. We're about to get into, obviously, some analysis. So, yeah, if you guys got any questions throughout the call, definitely let me know. We can talk about them. But as always, the start of our process begins with the news, right? And then from the news, we'll go to the bonds and yields, and then the DXY, and then the currencies, and then we finally will get to our indices. But yeah, so as you guys know, we've just came off of the U.S. elections. Mr. Trump won, and you can see the instantaneous result and like what took place as a result of Mr. Trump. And oh, sorry about that. But yeah, you basically were able to see the impact that his administration is going to have on everything. And yeah, it should be smooth sailing. Obviously, it's not. The leadership doesn't mean trading is going to be any different for you, but the environment should be a lot more healthy. So yeah, there should be a lot of positive things happening with the markets and the financial industry within the United States and then globally as a whole. But yeah, so we have CPI next week. We have a bank holiday. I believe it's Veterans Day. Yeah, Veterans Day, so there will be no trading. Expect very low volatility, if any at all. The day before, the day of, and the day after holidays are generally marked as low probability. So keep that in mind as well. That's a static process or a static rule that occurs every time we have a holiday. So, and then obviously CPI and FOMC and NFP, they all have their own like process around them and rules. CPI is generally a one-sided event versus the FOMC and NFP that could present in a two-stage event capacity, right? Meaning one direction gets attacked, they purge that liquidity, then they run it back the other way in line with the higher time frame narrative. Or it could be consolidating. It could seek and destroy you out the market, right? So with those landmines laying in front of us, the rules are always lower risk on weeks like this, especially on days like CPI or any of the other news events. So yeah, you know, you always want to ask yourself, when is the best time to trade and when is the best time to either lower your risk or just sideline entirely. And if you're new and you don't have a process and you're still looking for others to give you the answer or give you trades, or you know, you just haven't really found your footing entirely, you should not be trying to take challenges, especially if things are not organized. That's like you running a business expecting success, but you know nothing about the business yet and you have no experience. I mean, that wouldn't be done in the traditional world, although it may be done in some. But at a minimum, people have an idea of the process. They have an idea of how things operate. And of course, there's always going to be things to learn along the way. But in this case, you know, you want to give yourself the best chance of success due to the high failure rate. You know, you just got to realize there's specific things you must consider if you're looking to be a trader long term, if you're looking to quit your job, if you're looking to do all these magnificent things. But yeah, just some things to think about. But yeah, so we have CPI, like I mentioned, holiday, day before, day of, and day after, low probability. So we will be sidelined for the that period of time. I will be probably looking at some opportunities on Tuesday. We'll see how things look. But yeah, and then obviously Thursday, Friday, they may offer some interesting price delivery as well, especially because we got Powell speaking. We did just have a rate cut as well, so you want to keep that in mind also when you're analyzing the current conditions. So there's a lot of things that have shaken up the market, and there's more to come as we go towards the end of the year, into the holiday season, which, smart money is generally sidelined. December is generally a time when you really want to lower your participation. ICT has traditionally stopped trading in November's, so he goes from February to November, just due to the seasonal effect. Obviously that doesn't mean there won't be opportunities. Obviously that doesn't mean you're forced to not trade. But yeah, it's just important to keep these things in mind. Okay, so yeah, that is the news. So now let's move forward into some bread and butter. Yeah, no worries, brother. I appreciate you hopping on. Appreciate your support for sure. But yeah, if you have any questions as I walk through this, just let me know. I'll be happy to stop and try to get them questions answered. Okay, but I hope everything can be as clear as possible, as applicable as possible, because that's the goal, right? So now we're looking at the yields. Generally, a good rule of thumb is this will dictate generally where the DXY is going to go. Like if this is rallying and the bonds are dropping, we should expect downside movement for the indices and foreign currencies and upside for the DXY. But then vice versa, if this is going down and we see the bonds, which are these markets here, going higher, right? That would mean we'd want to be on the lookout for reasons to short the dollar and buy the other assets, indices, foreign currencies, so on and so forth. DXY is dictated by the yields generally. The indices and foreign currencies are dictated narrative-wise by the bonds. The two being in that relationship allow you to amplify the trust behind a particular bias or narrative, right? So I hope that makes sense. That's why I always start here. That's why the process is what it is. Because the goal, obviously, as I always say, is clarity. How do you gain clarity? You have pieces of information like this, and you master the analysis process, utilizing them over time. And then, of course, there's seasonality and COT and all that other stuff you can add. But this here, this one aspect of things is extremely powerful and can be very helpful and will prove to be very helpful. And I hope has been pretty clear the last year I've been doing these on YouTube. But yeah, it's like one of those things, right? It's one of those special like pieces to the puzzle in terms of bias and narrative, because you can't just see the DXY or you can't just see the indices going higher and assume that they're just going to go higher because you think they will. You can do that, but then at the end of the day, you're basically going off a whim and what visually is being represented without having the deeper context, which is where, in my opinion, true consistency and trust will come from. So the DXY is influenced by the bond yields, yes. Sometimes, obviously, if it's doing things that aren't in alignment with that relationship, the positively correlated relationship between the bond yields and the DXY, then obviously something's going on. The first rule of high probability is having multiple things being symmetrical in terms of risk on, risk off analysis. Basically, in layman's terms, that's just like high probability is seen generally when everything's moving the way it should be in relation to the relationship that they have together as a whole, because everything's connected. It's all connected. So if you can see things in a healthy market environment, meaning things are following what they're supposed to follow relationship-wise, then that is a first indicator of clean markets and high probability possibilities, right? And then obviously if that's the case with the US dollar and the bond yield, then the bond market themselves, which is these here, right? Bond futures. These will dictate what the indices and foreign currencies will do. They influence them. It's not perfect. Nothing in trading is going to be perfect. But at the end of the day, it's very, very consistent. And over time, you'll see that relationship and how helpful it is with backing up your bias and narrative, right? And then obviously the DXY is reverse it does like the reverse generally to what the indices do. So if you could just mesh this stuff together and see things unfolding like that in relation to what they're supposed to do based on the relationships, you can start to see how consistent things will be. And if you've spent some time on these calls or any time with me at all, and you've heard me mention this stuff and you've seen it for yourself, it's just going to be like getting more clear as the months pass, as you continue to use this analysis process, right? Clarity comes from having multiple things indicating that something should do something logically, right? Based on real logic, like the relationship I just described. That is something that's set in stone. That will not ever change, ever. So that part of the analysis process is very repetitive and consistent, and generally can lead you to having a very repetitive, consistent analysis process from the higher time frame. And then as you navigate that will obviously translate down to the lower time frame in many cases. And it'll allow you to also not be faked out by hard moves that push away from the assumed higher time frame bias or narrative, right? So it's obviously, some people think it's a lot of markets to keep track of, but at the end of the day, I mean, it is what it is. Do you want to be consistent? Do you want to have something you can trust that's repetitive and not guessing? Then this is, part of that process, is being able to analyze these markets. You don't have to trade them, but you do have to get a basic understanding, at least, of how these things all work together, because everything's interconnected, and, you want to be able to have this stuff behind you. Because then when things are moving in a trending environment and you understand this, you then start to be able to trust particular directions. Like if we're going higher, or we want to see the indices going higher, then we want to see the bonds going higher, right? We want to see it go higher at some point. And then we want to see the yields go lower, because that'll pull the DXY lower, which should then result in the indices and foreign currencies going higher. And then that would also give you the ability to trust discount arrays to buy at when price retraces in a bullish trend, right? So you can already, just off what I just mentioned, see how helpful it can be. But obviously me saying it versus you seeing it and applying it are two very different things. But that's why I get on here and focus here more than anything, because this truly helped me start to learn how to trust myself in my analysis and my directional bias identification, and it's just one of those things that'll help you not get pulled around like a rag doll, like many get pulled around like. But yeah, so like I said, right, starting here on the yields, we see that prices came up here. We've taken out this is a monthly time frame, so we just took a monthly high. We've also hit a volume imbalance. We also have another one over here that hasn't been reached, but we want to see whether this response is going to continue, or if we're going to end up, maybe eventually seeking more monthly highs, right? But if we look at these lows, we can observe SMT if it's there in any capacity. I don't see any SMT. We are back inside of this large range, so you can see from 2023 up until now, price has just been stuck in a range on the monthly time frame, right? So I mean, that tells you the condition, I guess, of what we've had to be, what we've all had to endure in terms of the U.S. economy and what's been happening with the interest rates, how volatile they are, and stuff like that. But yeah, if we zoom in a little more, we can try to see if there's any fair value gaps of any capacity, and there's none here on this time frame. Again, we do have a volume imbalance here. Price has taken the high here, so it's not unreasonable if they were trying to go higher to get back above that, right? Maybe retrace a little bit and then try to attempt that. Otherwise, if we stay below that and start really pressing back into this candle here, then obviously that should drag DXY lower, and then we would continue to see potential upside in the bonds and the indices. But obviously, we could see a very strong response to the downside with the indices going higher, super extended, and we're at a crazy level of excitement and greed in the U.S. Stock market, especially across the averages. So you want to be very cautious with what we are seeing. There is a bullish seasonal tendency for the indices, which I can pull up and show you guys real fast, just so you can see another layer to particular narratives and bias in conjunction with the bonds and yields. Let me pull that up real fast to show you. See if I could find it. Yeah, so oops. So yeah, if we scrub over here, November going into December, obviously there's been a bullish seasonal tendency. Everything's been moving together. So as a result, and then on top of the elections and all the news events and volatility that's been taking place, you can see why it's so excited and just moving higher. Plus, Trump's beneficial to our economy in the stock market and globally. So obviously we saw the result of just how influential that man is, right? So on top of seasonality and on top of the potential for the yields to maybe turn back around at this point, because now we've taken buy side. Now we're at a premium, right? So if it is going to continue, obviously we're going to have to see. But if it is going to continue going higher in the indices, we would like to see this start to turn around and start pressing down from this monthly capacity. Right now, you can see the month is opened. We're at the 10th. This is a new monthly candle. Prices ran up, took the buy side. Now we're starting to pull back lower. So what you want to think about is power 3, right? Is power 3 going to present us with a downside move with this? And are we going to continue to see the indices go higher as a result, right? That may be the case, and it's something that you want to keep tabs on because of what has taken place, right? We do have, obviously, the low down here, but there's not really anything super obvious aside from this, in my opinion. We do have an inversion fair value gap here that it also hit on this monthly time frame. Also, the volume imbalance. So definitely some observations to keep in mind. If you look at the 10-year, we could see there's equal lows down here. If price is going to go lower, this is what we would like to see, because it's rallied up now into a premium, tapped into logical premium arrays inside of areas where we could see rejection. So if this month continues with this price delivery after the rally up above the open of the month, and then we can start pressing lower in a more aggressive capacity, obviously that starts amplifying our ability to trust buy side delivery in the indices. And then if we could see this potentially turn around, then that would also be something justifying our bullish bias continuing. Otherwise, if this is going to continue to fall and it starts showing heavy price delivery, then obviously that will eventually lead us to a reversal of some kind in the indices, which would be totally reasonable because of how aggressively extended the indices have been. We've taken buy side here. It's not enough for me, to be honest, but we'll get to that in a minute. So yeah, I hope all this stuff makes sense. Let's go to the weekly now. We could see how price took out the buy side. We've aggressively sold off. There was a shift in market structure here. We got down below many different PD arrays on the higher time frame. If you look right here, we could see there's a fair value gap in here. So if this retraces higher, hits this daily fair value gap and rejects maybe getting back into this wick here that we have, then obviously my attention would start to go to this low. We've already taken this low. So this low, and then obviously down below the equal lows that are left here, we could see that there's a fair value gap that may be of interest if we do start to press lower a little stronger, and then see the yields try to run higher. Otherwise, if we start getting above like this fair value gap here, that would be an indication to me that we are then gonna really be able to trust continued buy side, and anything sell side delivery is going to be short term in nature. We are back inside of a range for the bonds and the yields, right? So let's pull back into that as well. Right, so again, we have an inversion fair value gap here bullish, right? Just as we have an inversion fair value gap here bearish. So you see that reverse correlation. And if you take that information and you go to the indices and you go to the DXY and have a continuous study on this, you'll start to understand just how impactful this analysis is and why I spend so much time on it, right? It's not always about just one asset. It's about all the assets together and you developing that skill set to then be able to build narrative and deeply trust the ideas you're trying to participate in, right? So yeah, we do have a new week opening gap here on the lower time frame, but we also have a weekly volume imbalance from the perspective we are looking at here. This is a weekly fair value gap, not a daily. So yeah, if we could stay below this weekly fair value gap, if we could show resistance here at this new week opening gap, and stay below this as well, then we'll obviously continue to trust that maybe this is going to continue to go lower. If it does continue to go lower, the buy side delivery here on the indices can likely trap people in, because remember, we're at extreme greed and excitement right now because of what just took place with the elections and all that. So I wouldn't be surprised if they try to take this and push it down. Even if they were going to try to go higher, I'm going into next week assuming that they're probably going to maybe run up one more time and then end up seeking this fair value gap here. We also have a bullish breaker here. If that bullish breaker was to be violated, that would be my trigger point to switch from bullish to bearish, right? Because that'd be more PD arrays than I would like to have seen get taken. There'd be an inversion fair value gap here. We have another one here. We have this fair value gap, and then we have a breaker candle. If it's going to be respected and go higher, those are levels that should hold as support and continue going higher even if it retraces. But this is the beauty of looking at the higher time frame and understanding and accepting the time in which it takes for the higher time frame to move and what justifies a change in overall delivery and narrative. This retracing down into this would not turn me overall to bearish. My bias going into next week, although we are in a higher time frame bullish trend, because we're so extended and we understand power of 3, price running down into here to maybe set up buys in the future would be logical. Therefore, if I'm looking for that, my bias in that case would be bearish short term, with the backdrop of us still being in a bullish trend, right? That doesn't change unless something dramatically changes, right? That dramatic change would be, like I mentioned, like this inversion fair value gap, this one, this fair value gap, and then this breaker candle getting totally violated, right? And if that was to take place, and then we can maybe see justification with the yields going higher, which would pull the DXY higher. And then maybe if we see the bonds continuing to go lower, if we saw this break, then you can start to see just how helpful that is, right? And how much you can start to trust the change in the overall sentiment. But otherwise, if this does hold, right, then obviously we're going to continue to trust that until something changes, right? So yeah, I hope that makes sense, right? So overall, once we get down into here, this is where I would consider potential buys maybe getting back in line. Otherwise, I'm going to be looking for price to want to seek some sell side. Because if you think like smart money, they go down to a discount to then buy and go attack premiums. We're at a premium right now. So buying here would be basically chasing and buying at a premium. What is that? Where's the discount at? Because best buys come from a discount, best sells come from a premium. Well, best buys would have to be in a logical discount PD array below price. We are so extended, it makes sense for them to want to retrace. Like if this was the 5-minute time frame and we were looking for this run on stops, shift in market structure, we'd want to see it come down so then we could position a buy at a discount price. Well, looking at this daily chart, that idea doesn't change. It's just slow. And you have to be able to, over time, understand that. and allow yourself to adjust to that and not be in such a hurry, treating the daily chart like the 5-minute, right? Although the tactics are the same, the time in which things take place is something that we have to all get used to, as a new trader, and in many cases as a veteran trader that doesn't look at things like this. So yeah, I'm going into next week, in a nutshell, looking for this to possibly seek sell side for a little bit, maybe to attack this, right? Maybe that will happen on Monday or Tuesday, right? If that happens, that would make sense in terms of bullish power 3, because if it drops lower, open price is going to be up here somewhere. So price dropping lower to a discount inside of areas that we've already anticipated here would make sense for bullish power 3 if the bullish trend's going to continue. But towards the beginning of the week, generally that's manipulation, consolidation and manipulation inside the weekly range. So we have to be able to see that and then go into each week anticipating that may take place, right? And then obviously the beginning of the week in that case would be potentially looking for possible shorts to then position us in an area of discount, so then we can look to maybe set up buys from there if everything's in alignment with that, still once we get there, right? And then again, my invalidation level is the bottom portion of this breaker candle low, okay? Because that would just change everything. And then obviously if that's justified with this continuing to fall lower, which may happen, if it does happen, you're going to witness and build some experience seeing how the bonds and the yields can actually help you anticipate things in the future. Because right now, nobody's thinking bearishness on the indices, right? But if it does turn around and break those levels, you have now seen you've seen documented evidence right now that we are possibly keeping that in mind. And once it does take place, if it does take place, we're able to then adjust properly and have no fear about it, no question, because we already have backed up information that would allow us to be flexible in that way, right? So yeah, does all that stuff make sense, you guys? I want to make sure, because that's very, very important information. Let me know in the chat. Otherwise, I'm going to just continue to fly through it. I'll assume that it all makes sense. All right, so now let's move on to the currencies. Obviously, the currencies have had an impact, right? They've been impacted from this large drop in the bonds. Remember what I said? The bonds, these markets impact foreign currencies opposed to the DXY, and then obviously the indices. So you could see this dragged the price lower. What did that do to the foreign currencies? Dragged them lower. Why has the indices not done that? Because the indices are being heavily manipulated right now. Elections and all that stuff, trying to make the administration that's currently there seem not so bad for the economy. Because people a lot of times correlate the stock market with the economy, and that's not how things work, right? It's just not. And a lot of times things are heavily manipulated, especially during elections. So again, this rally up here, if it does end up starting to tank, we're able to see the possibility of that, and we're able to then get in line when normal retail traders that don't think this way, will probably still try to push buys even if price comes down into this level and breaks this level here, right? And then obviously if this was to be violated, then obviously we have low here, low here, low here, and then obviously a fair value gap that may end up getting attacked. But we'll deal with that when the time comes, right? Just keep that in the chamber just in case we need it. But by that time, if that does take place and the change happens, generally I go live when there's dramatic changes like that, regardless of whether it's Sunday. Okay. I'm glad that made sense, brother. But yeah, so with that being said, like I said, you could see how the bonds impacted the currencies, right? They've dropped and now they retraced. We also pulled into a bearish breaker here, and the drop has continued. We have some trend line liquidity here. We have lows here. We have another fair value gap here. We filled in pretty much the whole weekly fair value gap I just showed, but we'll see whether it wants to stay below that or not. So yeah, we'll see what transpires after that. Obviously, the euro is extremely weak, and with what we see here, there's no reason to think buys at all for the currencies. So eventually, maybe after creating these all-time highs in the indices, maybe it'll finally kick back in line with what the bonds are doing and pull down just like the currencies are. But again, that remains to be seen, and we will keep that in mind, especially with the fact that the DXY seems like it's not slowing down, going higher. The DXY and the currencies are reverse correlated, or the DXY and the indices are reverse correlated, just like the bonds and yields, right? So if this continues and there's no stopping this, then obviously what I just mentioned about the bonds showing us the future for the indices potentially, and then this obviously possibly being a manipulation to get us up above the high here, it may turn into a reversal overall, right? So again, we want to keep that in mind because the stage is set for that at this point, especially considering the emotions right now in the market. Everybody's excited. They're going to go into Sunday today when market opens and they're going to start buying right away. And they will probably be victimized. Even if they get in and try to buy here, like I mentioned, I'm expecting price to maybe punch up a little bit, but then drop. Maybe that ends the week, right? Maybe that's what it wants to do for the week, is rally up, take buy side one more time, and then begin the process of possibly reversing and getting in line with the bonds, right? So those are things that we want to keep in mind. I would not want to buy this because we're so extended. I'd have to see it come down to a discount because that's part of the rules. Buying at a premium or selling at a discount, like ICT says, you're gambling and you're chasing price. You're disregarding any type of understanding that when things are in a premium, there's a likelihood for it to go to a discount. Then, once it's in a discount, you could then continue to try and push the buys, right? It just highlights the matter, the fact that patience is needed, and you can't just go in and assume something and just try to do whatever you want. You have to have other evidence, and that's why I feel like these calls are very important. And I appreciate the feedback, by the way. I've gotten a ton of feedback the last 2 weeks, the whole year actually. So I hope the perspective I've shared here with the indices makes sense. Like I said, the DXY is smashing higher. All these levels you see here are weekly fair value gaps I highlighted. So these are levels of potential dynamic support or resistance, depending on which side gets attacked. Obviously, we see relative equal highs here, very obvious relative equal highs here. If that is what's going to be attacked, then obviously, going back to what I said about the bonds dictating what the future may hold for the indices, would be very amplified. And then again, once price was to break through this breaker here, I'm then solidified in my analysis to then start seeking shorts at a normal risk capacity. Because we're bullish, any type of sell-off or sell-side opportunity we would participate in would have to be half risk, because that's, again, part of the rules. We have rules, and you have to follow them, right? They're there for a reason. So yeah, it's very important. Rules will make or break you. So yeah. So we also have this order block here. We have one here as well. This is like I think a 3-day order block, 2-day order block. Yeah, 2-day order block. So if we could just stay above that, then obviously the DXY will continue to go higher. If it breaks through the midpoint here, though, of this order block, then obviously we may start having some problems, because then it would be a volume imbalance broken. It'd be a midpoint of the order block broken, and I'm for sure bullishness would be over with if we break down below this low, because that'd be a volume imbalance, an order block completely violated, and then a swing low would have been taken at that point. And then obviously if the yields turn and go lower, then that would obviously justify that downside assumption for the DXY. But until that takes place, we continue to try to march higher with the DXY. It is at an area of premium, so if it was to break this low, I'd be highly interested in seeing it drop, and then that would obviously confirm further upside movement for the indices and foreign currencies. If the DXY is bullish, then indices should be bearish. Yes, sir, 100%. And if it's not, that means there's a crack in correlation. If things are not moving how they should be, they're not going to be perfect, obviously, but the overall higher time frame view should fall in line with that relationship. If things are consolidating in the DXY or consolidating in the bonds and yields, generally that will lead to sloppy conditions in the indices, right? Like it just goes back to what I was saying earlier in terms of using these things that we've been discussing as identifiers for high probability or low probability, or when you should or should not be pushing your trades, right? Or when you should have your risk cut. Like if things are consolidating and sloppy and things aren't moving the way they should, you drop your risk. Yes, CPI generally, that's a good thing. That's a good observation you said. CPI, NFP, me and my private community have been definitely studying how that influences the monthly ranges and what role those play generally inside the monthly range, right? That being CPI, FOMC, NFP, given the fact that they're so aggressive and generally highly manipulated. So it would only make sense to put those two things together in a study, right? And it's been pretty fascinating, pretty fascinating study. So you're definitely over a possible target, Ahmad. So I appreciate you mentioning that. A lot of people don't pull that type of detail out. But yeah, we'll definitely be keeping an eye on whether CPI is the manipulation. Then again, CPI also could be used as the potential move amplifier, right? All this run higher may have been the monthly manipulation, right? We'll have to see, right? Especially if it breaks down below this breaker low, that'll dictate to us that yes, that was the manipulation, just to run buys, trigger in people's emotions, trigger out buy stops, to then just look to punish anyone that was too excited, right, for the month of November. But yeah, so definitely something we'll keep in mind. If CPI manipulated, people will be distributed. Yeah, exactly. But that's the thing, you want to keep in mind what I just mentioned, right? We've already moved 10 days into the current month, so CPI may end up being used to break this overall direction, especially if this continues, right? Obviously, these observations, because they're on the higher time frame, you got to have like patience with it, right? You got to keep this stuff in mind and be patient and let things play out and show you, right? And obviously there's ways to navigate the lower time frame, which is something I go over constantly because I'm a day trader, but I have a deep understanding of the higher time frame. But obviously we prefer to stay on the side of what that higher time frame shares with us. You know what I mean? Yeah, power 3 is on everything. Power 3 is on the 1 hour chart even, right? 1 hour candles, 4 hour candles, even lower time frame candles, right? But most importantly for bias and narrative, obviously monthly, daily, and weekly identification of power 3 dynamics is highly helpful alongside the relationships we've just went over throughout the call today and in previous videos. Definitely power 3, market maker buy and sell models, all the logic related, all that stuff plays a role in identifying bias and narrative. It's more pieces to the puzzle that allows you to have more detail and on top of the relationships that we just mentioned, everything is helpful, but because there's so many different things you can keep tabs on and will eventually have to keep tabs on, that's why trading is difficult for most people. And a lot of people quit because they're not patient enough to master those skill sets within the overall skill set of being a trader. Right? That's why you can't master this in a month. That's why you can't master it in 1 year. That's why it takes time. And then you have to justify different things like seasonality and what actually influences the market. So right away, you can start to understand that anyone that says you can learn this in a week or month or whatever small dumbass time frame, you want to run from them because they're stupid. They're just trying to tell you, they're trying to get you to come over to see them. And a lot of times when you go and look at what they are doing after they made some crazy claims like that, they're most of the time nonsense, and they can't prove things live like I do and many other, proper ICT traders. SMT is very important to see where price will go. SMT is important in terms of helping you with that as well, but it's also something that most people don't realize is SMT at higher time frame levels pretty much can help you identify whether that level is going to hold or not. And if you're like a turtle soup trader, that's also part of identifying high probability turtle soup entries between correlated assets, right? So maybe you didn't have that observation before, maybe you didn't hear that before. But since you mentioned SMT, I'm assuming you do try to dissect it a little bit. Maybe keep what I just mentioned in mind as well in terms of validating or invalidating a particular area and price or PD array, utilizing SMT on top of some of the other things that we've discussed. And yeah, so yeah, you guys. I hope this stuff has made sense. Let me actually, I gotta pull up one other thing and then we can call it a day. So we'll go look at all the indices together, get a visual of that. What in the hell is happening? Why can't this thing go away? Okay. So let's take a look at what all three indices are looking like. I appreciate you guys that have been spending time with me. I appreciate your time. You could be doing anything else, but you're here with me, chiming in, adding to the conversation, hopefully learning some stuff. So, I greatly appreciate you guys and the time. And I hope you guys have been getting value. And if you have gotten value, definitely like the video. If you have friends that you think would benefit from this type of conversation weekly, or, are just interested in being around people that know what they're doing first off, and, are literally here to help, definitely send them my way. Because this is a very tight-knit community, especially in my private community. But I also got massive love for those of you that do come here and spend time, even for free on YouTube. Because I do this to help. And, you guys showing up and spending time here and getting value, that's the whole reason why I do this. Because, we should all be helping each other up and not cutting each other down or trying to flex on anyone, because it's stupid. It's literally retarded. like there's always going to be a better trader than you, but there's also going to always be people that are one step behind you. And I feel like, if we're blessed enough to get this information and find success in it, I think it's just, a good-hearted thing to try to share things with those that may be struggling. So because this is hard, folks. Like this is really difficult. It's a very hard thing to do, and it takes a lot of time. And us being able to help each other out and be there for one another, I feel like it's a very, very, very helpful thing, especially in an industry that's so plagued with a bunch of scammers and nonsense and liars and people who think they're the shit and they're not, and they can't do anything live, and they just, it's ridiculous. So if we want the industry to change, we have to lead by example and be the change we want to see in the industry. And it's a principle that I always live by, especially when I'm doing things live in this type of capacity in front of, people that want to lend me their ear. So there's some things for y'all to consider in terms of perspective for your own participation in the market, and those of you that have friends that are into trading, right? But yeah, so if we take a look at this, right, we can obviously see the weekly time frame shows that this was a big retracement, hit this weekly order block. We've had this weekly order block identified for a long time at this point. And obviously the strong response came as a result. Right, so we have a weekly order block here too, fair value gap. High probability order blocks are always coupled with a run on stops generally of a short-term low, in this case because it's bullish, merged with a fair value gap. That's not only true on the higher time frame, it's true on the lower time frame, as some of you guys may have heard ICT mention before. If you guys trade order blocks, that is a huge principle to use, because it is game changing, I'll tell you that, especially if you got this run on stops, right? This is an internal range, internal liquidity sweep to external range expansion, right? And that's actually something that's described in ICT's mentorship level content, or even the stuff I think that's on YouTube, month 12, I believe it is, where he talks about different patterns that he likes to use. This is like the internal range expansion, right? Sweeps the internal range liquidity into a PD array and then blasts off seeking external range liquidity, right? So definitely something for y'all to go dig into, right? And go check out, because we literally we see this. And again, for the last couple months, we've been fully focused on bullishness. Nothing has changed. Short term, things have been, bearish sometimes, but yeah, it's overall we've been trying to favor buy side, and it's been a good experience. And we've also been pointing out the things that I mentioned today with the bonds and yields showing what they're showing, and the possibility for this to turn things around on the indices. We've been pointing that out for a couple weeks as well. It's not something that I just discovered today. I've been talking about this for a while with my some of my students, and so yeah. But yeah, looking at the three indices, obviously that is continuing. We're now above a higher time frame PD array, so I wouldn't be surprised again if we do what I just mentioned earlier and drop lower to then try to go higher. Whoops, let me pull up the NASDAQ. That'd be nice. All right, so if we take that off again, like I mentioned earlier on the daily chart, for the NASDAQ, I wouldn't be surprised if they do want to pull price down into this, right? And then obviously you go and look at the weekly chart. Again, we're well above specific PD arrays, right? If it pulls down and we respect these levels, then obviously that narrative will continue. But again, if that violates and goes down below this breaker, that's my invalidation for bullishness. If that stays intact, we will continue to remain bullish, and any type of sell-offs will just be aimed at the perspective of seeking a discount to then attack premiums. All right, so that is what our perspective is going into this week. CPI is coming, like I mentioned earlier. Always think of power 3 at the beginning of the week, which is what we're going to do here. So for you guys as well, if that hasn't been something you do, definitely do that. And keep in mind what the bonds and yields are going to do. Because again, if this continues to go lower, we are setting a stage in the indices for price to potentially start wanting to seek sell side. But again, we don't pick tops, we don't pick bottoms. So until something changes and justifies us to switch from bullish to bearish, the justification would obviously be price breaking 3 or more PD arrays to the downside on this time frame, because higher time frame is where you look at actual deepened narrative. So yeah, just keep those things in mind, okay? Last week was insane. Yep, no, it's a fact. That's a fact. And that's the thing. Leadership in the United States is very, very important, because, that is the same for every country, but United States is interlocked with many, many countries. And if we fall, everybody else falls with us that's associated with us, and most of the world is associated with us. So, we all got to pray that the United States does good, whether you like the country or not, because it's beneficial to everybody, regardless of the flaws that our country has. Every country has flaws. We should all want everybody to get along. We should all want everybody to prosper and thrive, and spread more love versus spreading animosity and anger and other nonsense, right? It's not healthy or helpful to anybody. So, but yeah, expect nice moves to start rolling out and more readable price delivery, because the conditions economically, because of the new leadership, it's going to be phenomenal. I'm telling you right now. The man is a savage economically, and I expect that to be the case this time around, but probably times 10, because now the man has experience. So it's going to be one of the best times in history, in my opinion, to be both an indices trader or a forex trader. Thankfully, forex was about to die if the stuff continued the way that it was. But now I feel like we may even start slipping in some trades for GBP USD, because that was my currency of choice. But obviously, I love the indices more. It's just more clean, more I guess, professional, you could say. But the moves are going to be wild. So all the times that you have spent the last couple years, if you've been trading for a couple years, it's been the hardest conditions to trade ever. ICT himself has admitted to that. So if you've been able to find any type of success, even a small amount, or grow in any capacity through the storm that all of us have had to endure, you're going to see that all that time was spent well, and you not quitting will result in, you having a newfound probably love for this industry, and then also confidence in yourself, because you're going to see things unfold that make sense. And as long as you manage risk properly, never quit, stay consistent, stay locked into the market, especially right now because things are going to get good, you are going to see some nice things take place for you in your trading. Okay. And obviously, if you continue to spend time here, you'll also gain a wealth of knowledge as well, alongside any of the other resources that you use, right? But yeah, with that being said, you guys, we could see there's fair value gaps here for all the indices. So again, overextended, we're due for some type of retracement. Whether that retracement leads to an overall change in the overall state of delivery, it's going to be based on whether this breaker candle here can hold and what the bonds and yields eventually look to do as we close out the rest of the year. So yeah, I hope everything made sense, you guys. If you guys ever got questions, leave comments. Follow me on Instagram, WMG Trading. Follow me on X, WMG Trading. Again, if you have any friends that like this type of content or you think it'll benefit them, definitely let them know about the channel. If you haven't subscribed already, definitely subscribe and like the video. And yeah, hit me with any questions. Like I always say, I'm here to help. I want to see you guys thrive. I don't sit here and waste my time doing these. I do them for a purpose because I want everybody, whether they can afford or have any interest in getting into my private community or not, to thrive. I want you guys to win, because this is an amazing industry. It's changed my life, changed many of my friends' lives. A lot of my students have seen crazy results, and it's just a wonderful industry. And having good people around you is very, very important, because like I said, the industry is plagued with a lot of clowns, and you don't want to be hurt in an industry that offers so much, right? So yeah, again, I appreciate you guys' time with me, as always, and I'm still deciding on whether I'm going to go live next week, but I'll let everybody know ahead of time. But yeah, with that being said, you guys, thanks again for your time. I hope you guys have a blessed rest of your weekend, and just be safe this week, okay? Don't do anything stupid. It's not a week to want to just press. Remember all the things that we've talked about, and I will see y'all on the next call. God bless you guys, and thanks again for your time.